First top pick, Morgan Stanley. We touched on the U.S. banks earlier. Why do you like this one?
So we like capital markets. We're a bull in the market. They are the number one equity trader. They are probably the most successful trading shop today. They are a big beneficiary of higher rates. They've got the whole net cash balances for their clients. They've got a giant private client business, $3 trillion in assets that they take care of. They're executing in all of their businesses. If you think that deregulation is coming, they benefit from that as well. This is, I would say, a little bit more forward-leaning than buying a J.P. Morgan, right? Because you're more attached to the market cycle.
Because of their big equity trading business.
Because of their big equity trading business. But they're number one in institutional equity trading. It's a great business, but I think for this environment, if you believe we're in an equity bull market, this is a great way to have some attachment to it.
Now, you told us you're not a fan of, not that keen on interest bond proxies, high-yielding stocks, but you quite like this electric generator in the States, NextEra.
Yeah, so look, NextEra is the company in leading the way in renewable power and alternative energy. So 50% of their power gen comes from wind power and is growing very rapidly. It's important to know that wind power and solar have now become less expensive than coal power. Like, that's really a big deal. At the same time as we're about to head into an electric vehicle revolution. So the nice thing about electric vehicles, they charge at night. And so what this company has done is they've done a lot of research on battery technology, storage. They service 5 million customers in Florida. It's a big utility. They got a great balance sheet. They have 20-year contracts to supply power to their other utility customers. So it's a growth company. It's a secular growth company. They pay 2.6% a year. They'll grow their dividend 10% a year. And I believe that the move to electric vehicles and renewable power will happen much faster than people think, and coal is going to be gone.
Yield of about 2.6 right now from NextEra, and FedEx, a classic way to play the U.S. economy.
Yeah, this is very sensitive to the global economy. They bought TNT. They've been integrating that, reducing costs. As economic activity picks up, these quick deliveries accelerate, the pricing power improves. It's not just the U.S. Every major developed economy is accelerating at the same time, and this is a great way to have some exposure to the industrial economy and to the internet economy.
You're not a yield stock, about 1%. Is it capital intensive? Do they have to keep buying new stuff? I mean, you need a lot of vehicles.
No, absolutely. It's a capital intensive business, and it's a technology business, right? So this is the global supply chain. And I think that there is pressure, which means that there's pricing available, and they are in a pretty dominant position. They've also got an opportunity to cut expenses through this purchase of TNT. And the trucking business, the capacity is quite tight on the logistics side.
And an e-commerce play, as we all get packages delivered.
That's right. More so UPS than FedEx, but for business, FedEx is the e-commerce play.
David, thank you very much.
Thanks for having me.
David Burrows has been our guest on Market Call. The Encore airs Monday through Friday at 10 p.m. Eastern, 7 o'clock Pacific. And we are live Monday through Friday at 5:30 p.m. Eastern for Market Call tonight. Thanks very much for watching. Have a wonderful afternoon in the markets.